Hello and welcome to the Power of Passive Investing, guys. We have an amazing guest today, David Hansel. Dave and I actually go way back to pre-pandemic. I know times are now go to after pandemic or before pandemic. I believe we met at Jason Zerusi events and even shared the stage at one or two events. And yes, David is local to me. We're both in New Jersey, and it's been amazing to see the transformation and the progress of David's team. David, how are you doing?
I'm doing great. Thank you so much for having me on today.
Of course, it's my pleasure. Excited to have you and for our listeners to learn more about you. But before we get into that, can you please share a little bit about yourself and what you have been doing in the real estate world over the years?
Sure, absolutely. I'll go back in time here. Actually, I'll start with the end and go back. But I run and own two different companies, Alpha Funding, which is a private lending company where we provide hard money loans to other real estate investors that fix and flip, ground up construction, DSCR. Started that business back in 2007, have built a incredible team around that and a great repeat business. Over the years, we were investing for our own portfolio, and a lot of the investment folks that joined us in the lending side of the business want exposure to equity and ownership in real estate for various reasons, including depreciation and cash flow and things of that nature. So about 9 years ago, had launched Lucerne Capital Partners. We're a real estate private equity firm that own, manage, and operate both multi and industrial assets. We pivoted very heavily in the last couple of years to the industrial space and focus primarily on small bay industrial. And we do these through individual syndications where investors will partner with us on these deals. And we're continuing to grow that platform and portfolio. And that gives you kind of a high level overview about who I am and what we've been up to.
Awesome. It's amazing. And David, thank you for sharing your extensive background in real estate. And just curious, you said you started Alpha Funding in 2007. Um, is that when your sort of career or your work began, or have you done anything else prior to that?
So I actually out of school back in the late 90s was working up in Boston, and got involved in the tech industry, was in project management and was a casualty of the dot-com era going bust.
I
And I was
see.
trying to figure out what to do with myself. And I came back to New Jersey where I'd grown up and got my real estate license, was doing both commercial and residential brokerage. And during those years, I also started flipping some houses and got involved in some new construction projects. So in 2007, through a mortgage brokerage relationship, had an opportunity to make a private loan. And that was kind of the start of Alpha Funding. So I had been involved in real estate really since 2001, both as an investor and as a broker, and then started the lending company. Didn't start it on purpose. It was me and my partner. We just had this opportunity to make a loan, realized there was more opportunity in the space to lend and continue to grow that over the years.
That's amazing and really interesting progress. How one thing kind of led to another, but you said you started Alpha Funding around 2007. Probably not the best time to start a
No.
company, but that only speaks volume about your grit and your desire to succeed because you started in such challenging times. Um,
Yeah, it definitely was. And it wasn't really till the end of 2009, 2010 that we started to grow and really push out. And there wasn't a lot of business to be had in '07. It was kind of some deals here and there. And then in 2010, we started to raise capital. because at the time there was no institutional money for the financing, and you run out of your own money pretty quickly lending, right? You need a lot of dollars to lend. So we started an investment program, and a lot of the investors that started with us in Alpha years ago are still with us today, participating in deals that we're now doing at Lucerne. But it grew a lot through 2010 and on.
That's really amazing, David. As you were sharing your bio, I noticed a particular trend. You started alpha funding out of necessity because you saw the need for funding, and then as you progressed with your hard money lending business, you said your existing clients were asking about equity deals, and that's how you got into multifamily and so forth. For someone who is starting out, what would be your suggestions? Like, how would you suggest to notice such trends and cater to the people around you?
Sure. So for us, it was, well, let me go back. It was a combination of our investors looking for it and timing worked out because there's another partner, Frank Forte, who's a partner in Lucerne, who had more of an institutional real estate background, and he was looking to start his own private equity shop. And he came to me and my partner at Alpha looking for equity. And we said, not only do we like the deal and we'll put up all the equity, but why don't we talk about partnering up? We knew that there was an opportunity for us to bring capital, operational background and experience to that. But I think for new investors that are starting out, it's kind of finding your niche of what you're good at and what team or resources you do or don't have. So if you're an individual looking to get involved versus already have an operating company, you may want to like attend local meetups that are focused on investments that you're interested in, be it multifamily, industrial, flipping houses, whatever it may be, and start to build your network of folks, not just people that can provide deals and investors, but brokers, attorneys. There's no clear, simple path to take, but it's about getting out there and meeting with people and getting educated on a regular basis, looking at assets that in a market that you're interested in, becoming an expert about what is available and what's trading. Those are all like important pieces to know where you're going to fit in that ecosystem and whether you're able to go and do that on your own or you partner with somebody else that's already active in the space and bring your skill set to them.
Got it. Makes perfect sense. David, you mentioned that your equity journey started in multifamily world. Same was for me, but then you said you shifted your focus to the other commercial real estate. In your case, it was small bay industrial. Can you share with us how and why did you shift to small bay industrial and what your strategy with that?
Sure. I'll first explain small bay industrial, if you don't mind. It
Of
might be
course.
helpful.
Please,
So
please.
industrial, is a broad term that can encompass small bay or the big warehouse that you drive for 30 seconds past on the highway and you're still driving past it for a major distribution center for Amazon or food storage or things of that nature. The small bay is really more akin to what a neighborhood retail strip center is, to retail. Like you have your big box retail like Targets and Wegmans and Costco's of the world. And then you have this neighborhood strip center, which has like your nail salon, your pizza place, the Chinese restaurant that service the local area. And small bay kind of is that same thing in industrial. It's cut up into much smaller suite sizes between 1,000 and 10,000 square feet. You have a diversity of tenant base typically and shorter lease durations. And I will answer your question, but I think explaining this is helpful for it. So you have much shorter lease durations, typically from a year to 3 years and some as long as 5 years, but it gives you an opportunity to increase rents at those points where like a large industrial complex or a large retail complex may have 10, 20-year leases in place. So you're married to the rents that are in that. So we had, as multifamily was having its challenges when the interest rate environment moved up, I think it was in 21, it put a lot of pressure on multifamily operators. And, there were issues not only on the cost of debt, but also there was a lot of new inventory hitting the market, creating competition for existing product and lease up. So you saw rents starting to dip some. And about 3 years ago or so, we started looking into the small base industrial space and bought an asset for us just as principals to get our feet wet. But we realized that it had a lot of similarities to multifamily, but didn't have some of the challenges that come with multi. So it allowed you to mark to market, like increase rents, because in a multifamily, your rents are, your tenants are usually in there for a year. And then if rents have moved up, you can go ahead and do that. The occupancy levels are extremely high. Vacancy, obviously, then is extremely low. There's not a lot of this product out there in a lot of these markets, and the cost to build it is very prohibitive to building new assets. So we saw a supply demand imbalance, and we saw the long-term growth and need of it. These developments typically follow the growth of residential development because the tenants in our buildings a lot of times service residential. Could be your HVAC companies or electricians and plumbers, the trades. You have small distribution centers, small manufacturing, car related, from detailing and services in that regard. So to put a bow around everything I'm saying, it allowed us to still invest in a space that had significant upside, had really good cash flow, and had a strong supply. And all of those factors together kind of made it very attractive for us to pivot into that space.
I like the approach that you guys took. Instead of taking new investors with you and risking their money, you only put your own money on the table to test the waters, as you said, and see how it works. That speaks a lot about how careful you are with your investors, and that you're not willing to put them at risk, but you're putting your own money at risk first, which is definitely very, very impressive in general. Let's go back and dive a little deeper into small bay industrial. You said that you're able to mark to market. So when you have leases with them from, say, 1 to 3 years, are you able to modify the lease even within this time, or you have to wait till the lease fully expires to increase the rent?
So you have to wait till the lease fully expires to increase the rent. So whatever terms are there. What's kind of interesting is we're actually closing on a property today, and in the lease there were renewals off of the base year where additional expenses off the base year would be charged to the tenant. And they weren't being charged to the tenant by the current owner. And what's kind of interesting is when we started investing in multifamily 8, 9 years ago, we saw a lot of older ownership where they didn't effectively manage the asset. They owned it at a good basis. They were making good money, but they weren't optimizing the management or the operations of the property. And we're seeing a lot of that in the small bay space. So the deal that we're closing on today, this project, they weren't charging over the base year. We're going to come in and we're going to increase the monthly revenue that's brought in because we're going to pass on the base year expense, the increases over the base year expenses, which the tenants have been able to not have to pay even though they were obligated to. So will they be upset or frustrated? Maybe a little bit in the beginning, but their rents are way below market. And they're still going to be below market even with that. And then as the leases renew, we can move them up or close to market value. And if they choose to leave, then we'll replace them with a new tenant. And being that the occupancy level in this particular market is 98%, there's not supply out there, so it'd be easy to replace. So you typically have to wait. However, if you take over a property and things weren't being done in coordination with the lease, that does give you an opportunity to make some changes in the interim.
Amazing. I love it. And David, in terms of the locations, are you guys concentrating on one or two areas, or do you have numerous areas that you look at?
Sure. So that's a good question. So when we pivoted to the small bay, you kind of have to be open to a broader geographic footprint than you would per se in multi, because there's a lot of product in every market, in every sub-market when it comes to multi. But finding the small bay industrial is not as easy. There isn't as much of the inventory around. We have focused in some very particular markets, but we are continuing to grow into some newer markets, and we'll continue to increase that footprint mostly along the Eastern Seaboard. We've been a big proponent of assets in the Carolinas, specifically North Carolina. The asset we're acquiring today is in a town called Mooresville, and that we own some other assets there too. But we've expanded into Maryland, where we have a new acquisition that we're in due diligence on, that's up in New York, not too far from Saratoga, in a very, very strong marketplace. So we are looking in a broader footprint now as we're continuing to grow this portfolio.
Very nice, and congratulations. Hope today closing goes well for you guys.
Me too.
In
Closing
terms,
day is always fun, right? There's always
yes,
to happen.
it is very true. In terms of being fully integrated, is your goal to outsource property management and maintenance, or are you trying to bring it in-house?
So we have all of our assets are being managed in-house with the exception of one, which was the first one that we had done with investors, and they're doing a great job on it. And we don't want to upset the apple cart. And but our intent is to continue to grow our own asset management and property management portfolio. We have software and a team to handle that, and we'll continue to grow that as the assets in the portfolio expand.
Very nice. And I like your approach. And I also am is a big believer of bringing everything in house, because then everyone is sort of dancing under the same tune and knows what the processes and procedures within the companies, and have the same goals in mind when operating. And you can also share the resources, which I think is incredible, because
Yeah.
you're expanding and growing, and leveraging resources that are already in place is a big deal and allows to grow faster. Speaking of resources, you mentioned software. Are you guys utilizing any of the AI available today for your business?
Yeah, so we are, and we're looking to integrate more AI. Obviously, on basic stuff that everyone's doing, we're using it for some communication and emails and things of that nature and updates. But we're taking our weekly. We hired a group to help build an AI agent for us, and we're taking our weekly financial reports from all of our properties, and we're running it through this agent that is spitting out a report to us that gives us an overview of the health of the property from the P&L. It brings up any variances and when things are getting bigger. If there's something that's out of line, it will help us to do that. And we're going to implement further AI into different aspects of the business where we're using it to consolidate a lot of data and give us insightful information as we sit down for our weekly, property management meetings or our weekly company roundups, so that we have a clear picture of what's happening in the business.
Very nice. And David, are you sharing any of that reporting? Are you preparing any sort of reporting for your investors using AI?
So right now we do a quarterly updates and reporting along with distribution to our investors. So we're typically writing, we're putting that all together, and we might use AI to clean up some of the stuff afterwards, but we're not using it in like a deeper, more meaningful way at this point. But we're looking at new ways to integrate now that we found a company that can help us take our dreams or ideas about what we want to do and make it happen. We're going to kind of tackle a project at a time and try to implement further into other aspects, including investor reporting.
Amazing. I love it how you're not only growing your company and bringing the work in-house as far as asset management, property management, and so forth, but you're also integrating AI that helps you and your team to grow faster.
Yeah.
That's great. David, where do you see your company going in the next 5, 7 years?
That's a good question. So I'd like to see it continue going up at a very fast pace. We've had some discussions, and it's kind of interesting. There's a lot that's going to be changing on the horizon when it comes to capital, especially with this new bill that's being passed with the 401ks allowing access to investments. So we're having some early discussions about doing a fund. Whether we do that or not, it's yet to be determined. But we've done a fund in the past on the multi side. And depending on how things shake out with the advent of the 401k being able to access these private placements, we may look to raise a substantive fund. But our goal will be to increase, in the small bay space until we see things changing. And we've been pretty dynamic over the years. So we've pivoted into different strategies based on what's available and what opportunities and risk reward imbalances there are out in the marketplace. So, the big goal is to continue to grow the platform and assets under management.
Of course, makes sense. And with the potential 401k bill, it is a greater reach, I agree. But even today, investors can invest through the self-directed IRA.
Yes.
The opportunity is there. It just has some obstacles on the way where a lot of people require additional education to be able to understand what it entails, because the self-directed IRA is not as highly publicized as 401k. So I understand where you're leading with that.
And the difference is also it'll be a world of difference when the financial advisors are offering up real estate, private offerings or funds that are available, where prior that wasn't happening. So this money is, that's held under these managers can now be allocated. So I think it has the opportunity of really shaking up the space in a lot of ways, and we're paying close attention to it, and going to try to figure out how we can be part of that change and growth that's going to happen.
True. So that essentially entails building relationships with RIA and wealth managers now, before this bill gets to be passed. Hopefully, it will be passed sooner rather than later.
Correct.
As far as the company growth and the challenges that you and your company had to overcome, I'm sure there are always challenges on the way for any company. In your particular case, while you guys are growing and keeping focus on small bay industrial, what would you say are some of the bigger challenges that your company has to overcome now, whether it's capital raising or AI or something else?
Well, as I'd like to say, there's only two things that we really have to worry about in this space. There's a lot more, but the two major things are deal flow and finding deals, and then capital, right? And so those are two things that we're always working on and always spending time on. Operationally, obviously, we have to be able to expand as the portfolio grows, but I think we've got a good handle on operations and the team and able to expand as we grow. But making sure that we're able to find deal flow. There's a lot of new interest in this niche of the industry that has kind of come to light in the last year. So you're seeing a lot of investors, both from the syndication world that we're in multi to large institutional investors having interest in the small bay space because of the risk reward that's offered in it, which it will eventually change the space, right?
Of course.
So it gets more and more challenging to source deals, and we work really hard on that all the time. And then obviously, continuing to expand the investor base outside of the core group that we've built over the last 2 decades or so almost.
David, what are some of the ways that worked best for your company in terms of growing investor base? Is it warm introductions, or is it repeat investors, or something else?
So for us, it's been warm introductions and repeat investors. We haven't done a lot of I guess publication or advertising or marketing to try to bring in new people. It's been through word of mouth and through active investors. And then we do a lot of thought leadership, and we try to be active in the space. So sometimes people reach out to us because they've seen some of the stuff that we're doing. My partner was just named to Globe Street as one of the most influential people in the small bay industrial space. So things like that we keep active in, and that seems to help. So we just try to provide good, helpful, useful info to attract new people, and then lean on the base that we've always had. And obviously, talking with people like you and being out and about in the world helps attract additional capital as well.
Of course, makes sense. Well, David, this has been very enlightening interview. Thank you for that. At the end, we usually like to ask two personal questions. As the first one's been, how can our listeners contact you if someone wants to talk to you? What are the
Sure.
best ways?
So I'll give a couple paths. So on LinkedIn, you can find me. My name is David Hansel, Hansel. And you could message me there. You could certainly visit our website at Lucerne, LUCERN capital.com. And there's ways to connect right off of there. There's a chat bot, or you can contact me direct via email at david.hansel@lucerncapital.com. So happy to chat with people if they have questions or want to learn more about the space.
Very nice. And I posted them in the chat. So when our audience is viewing.
And you got it correct. Good job.
Yes. Well, I've known you for a while. So
I
yes,
know.
your company name. Absolutely.
Yeah.
Thank you for sharing. And our last personal question is, how do you like to give back?
I like, it's interesting. It's in weird little chunks. I like when people come to me and or ask questions or want to get educated about a space. I love to provide helpful information to other people that are working their way in the space, whether a newer investor or been in a long time, and wearing also the hat from Alpha. On the lending side, we do a lot of speaking engagements and try and give back and provide helpful educational information through that. So by speaking and not formal but informal mentorships, I love to help younger people that are getting started, and I see a spark in them that they're going to have some success in life.
I love it. Thank you for that. And it may seem small to you, but giving back your time to educate someone is priceless because you're essentially putting that person on a path to success without even realizing it.
Yeah.
And what's always been rewarding to me is meeting that person, or even better, when the person reaches out year or two, or even 5 or 7 down the road, saying, thank you so much. Because of you, because of that lunch or coffee conversation with you, I was able to start my path and start passively investing, or I bought my first property, my first small bay, and so forth. And that's what essentially is the most rewarding experience, when you hear about their successes and their first steps.
That's awesome. Yeah, I totally agree.
Yeah.
And you do a lot of that. You're always great with people and always with your time and your knowledge. So
Thank you, David. Likewise, I know you do a lot of that, and I've seen you in action. I've seen you present and share your knowledge and drop a lot of it on the audience, and how people always line up to talk to you because you're always open to share what you know. So thank you for that. Very much appreciate. David, it's been an amazing interview. Thank you so much. I'm sure our audience will appreciate that as well. And everyone,
awesome.
until the next one, goodbye.
Thank you.